Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, Jerry, it's been quite a week, not only a week, but it's been quite a month as we watch the metals. It's unusual, to hear these clients calling and saying, what's going on. And I guess sometimes we get a little spoiled when we look at 11 years. We've been on the other side with the currency that was falling, and we were seeing gold and silver going up in dollars. And now the Europeans are enjoying or not enjoying what's going on there as their currency falls and people move to liquidity and into U.S. dollars on the short term. And they're now seeing metals going up in their currency, and we're now seeing metals go down in ours.
Well, I used to have a friend who was a meteorologist, and every time it rained, he got the brunt of it. Every time the weather was bad, on the weekend or whatever, he heard about it as if he could control it. And I would imagine that, as the precious metals guru, as the precious metals expert, you've probably been getting a little bit of that recently with all the craziness we've seen. It hasn't just been gold. I mean, we've seen commodities overall lose a lot of their luster. All of the 2012 gains wiped out on many of them, including oil. Oil's been dropping like a rock lately, too. So what do you think is really underneath all of this? What do you think is really guiding not just gold, but also the commodities? Is this still just the European story in your mind?
It is, Jerry. It's 100% in my mind. Investors being scared about a deflationary recession where these prices contract. There's no economic activity. Money's not being printed fast enough to stimulate the economy, and everything just falls down. And I think as I talk to large investors and even wholesalers, major wholesalers that supply metals, they're all seeing the same thing as people have the fear in their mind because so far nobody's tipped their hat. We all talk about inflation. We all think we'll end up with a lot of printed money and quantitative easing, but it's kind of like right now, you either have to just take your stance and be black or white and not get out of the gray area. I mean, we're sitting in the gray area saying, well, they haven't announced quantitative easing 3, so we'll just sit here in the gray area until they do. But, I have seen some very large investors this week move money saying the price is good enough for me now, and when the herd comes in a few weeks or months, I want to already be sitting there because I do not want to be holding U.S. dollars. But I think it is a fear of a potential recession worldwide and declining economic activity and all of it being launched out of Europe, but it could be exported to the United States and the banking system here if things fail the wrong way.
Well, we saw over in France the election that really indicated to many that there are shifting winds in Europe, and they did try austerity. You've got to give it to them. They certainly did. We saw quite a bit of austerity measures, especially in Greece. It's just hard to envision that they're going to make austerity, that is, this self-imposed spending cuts and reduction in benefits, that's just not flying too well. Greece about burned to the ground when they tried that. And so, as we look out in Europe, I believe, and I know here at our organization, we really believe that we're just going to see a reflation, that Europe is just going to continue to print money. They're going to kick the can down the road. You even see them strapping up their boots here in the United States as they prepare to do that again. So this QE3, I think, is probably going to be coordinated with some similar actions over in Europe. I know that many of the central banks for a long time have been coordinating their efforts. So they try to act in coordination. But I think you're right. The big reflation that lies ahead is going to drive up asset classes of all types and all stripes. I view this right now, Tom, as a buying opportunity. Whenever I saw gold, dip below $1,600, it was a gift. Now, Buffett, Warren Buffett, the world's biggest investor, says that gold is an investment for those who are uncivilized. What say you? How do you respond to that?
Well, Warren Buffett's a brilliant man. He's made billions of dollars, but you look at his track record the last 5 years, and he's named the top 65. I mean, he's made some very, very poor investments and decisions. and a lot of people think he's past his heyday at his age now. I think he's still a very bright man and surround himself with very capable people, but certainly he's been wrong about gold for 12 years, and certainly he's been wrong about where he's been putting money, because, I mean, I've owned his funds in the past, and they just got where they were losing money rather than making money, and I mean, that's a fact. So it doesn't worry me when someone like that sees bad things happening for the stock market and tries to put in their $2 worth to keep people in the asset area that he wants. And that's the way I look at it. I just look at it as somebody out there blowing off smoke that's been upset about the climbing gold and his performance in his own portfolios.
Well, I think that's interesting, because there's a lot of people out there who feel the same way. I know that there's Warren Buffett's been dogging gold, and of course Bill Gates, and of course Dave Ramsey we've talked about on this program. And it's just been kind of a losing bet. I mean, we've been looking at gold and silver prices as of late, as you point out all the time. If you look at a very short-term period, well, you'll see a lot of volatility, and people need to realize that silver especially is subject to volatility. But in the long run, in the long trend, these things have been going up for a long time, and people who bought a year, 2, 3, 4, 5, 6, 8, 10, 12 years ago, most of them are in a good position unless they bought those numismatic coins like you've talked about before. It's always good to stay with bullion. Now, let's talk about palladium for a minute, because palladium has really taken it in the nose. What's driving that? And I know Russia is an important topic when it comes to palladium. What's new in palladium, and what should people be realizing about it?
Well, everything right now, strictly the news, is fear of recession and economic cutback in cars, car sales going down. And this is 100% being driven down by people saying we're looking at the current economic activity worldwide, and especially in China, where their economy still growing but not at the same pace. As many cars as they had predicted may not be sold this year, and therefore they don't need as much palladium for the catalytic converter, and therefore we're getting a pullback in the palladium price. And certainly that can turn very quickly because of the rarity of the metal, and the investors are secondhand compared to, the industrial users in palladium. But if you're a car company right now and you're not selling a lot of units of cars, then you're not going to be buying a lot of palladium, and it's kind of waiting around like everything else to see if they reinflate. And one other thing I meant to mention earlier, this past weekend, I had a client in from Italy, a very wealthy man, and we were talking about the situation, and he made a point that I've never heard anybody else make. And he said to me as we were eating lunch last Saturday, he said, in Italy and Spain and England, these places, it's not like Japan and the United States. He says most people over 50, 55 years old own their houses outright. He says, and we pay our credit cards every month. And he said, and what's causing our problem over here is all about retirement. It's all about funding future funds for retirement, whether it's Greece or Spain or Italy. This is the problem. We're running deficits now because we moved the retirement age down lower when things were good, and now we're paying for it. But what was interesting, I'm thinking about how bad a shape America's in with everybody's house that used to be their most precious asset, losing all the equity in that, having credit card debt piled up. And then on top of that, we've got the Social Security problem. We've got double and triple the problem they've got. Can you imagine what it's going to be like when it gets here? But the bottom line is it's all going to end up with a gold-backed standard and fiat currency not making it. And that's the way we as investors have to think about it and not sit here and worry if it drops $30 or $40. It just means absolutely nothing. Yeah, the trends are in place. Now we're looking at the price in a short term now. We're looking at a price of gold at just under $1,600. What are the key levels for gold that you're keeping your eye on? 1580. We got to stay above 1580, or we could go down to 1540 and could have another $40 drop. So, You got 2 weeks until Bernanke speaks again, and so we'll be in a neutral zone until then. And you could see gold stay kind of neutral around this 1,600 level or drop back to the 1,580 to 1,590 level next week. But once we can get to the 2-week meeting of the FOMC and hear what Bernanke has to say, I think there's a good chance that we'll start seeing the price come up. So 1,580 is the first level I'm looking at on gold, and silver is 2,850 on silver, and palladium's right at 600.
It's interesting to note that China has not slowed down its gold consumption even throughout all of this. It views these moments as buying opportunities, buying on the dips.
That's exactly right, and that will continue. So, overall, nothing's changed. I met with an investor this morning, and he was saying, the way I look at it, I'm up 2.2% for the year in gold. If we finish 5 months at 2.5%, he said, I'm still annualizing 7 or 8%. And I said, it's really hard. People don't think of it that way. They just think of the 14% drop we've had in gold, over the last few weeks. And I said, and yet we're still up for the year and still annualizing at nearly 8% for this year, the way it's even after the drop. So it's another good point that we just all need to remember.
Yeah, no doubt about it. And I know that EU bank bailouts are going to be inevitable as we go forward, and QE3 is all but certain. And so we're going to see a lot more monetary easing, and that's going to mean good things for gold and silver. If the folks want to contact you, Tom, they can call you. What's your phone number?
800-247-2812, 800-247-2812. And if they're not on our eBlast list, they can go to FTMDaily.com and click on the precious metals button and sign up, and we'll send you. We don't sell your name to anybody. It's completely confidential, and I'll send you out about 3 email blasts a week to keep you up with market conditions and good articles and buy and sell signals and special deals when we have them available.
Perfect. All right. Thanks so much for your time, Tom. I appreciate it. We'll talk to you next week.
All right, Jerry. Always a pleasure.